Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss Microsoft earnings and the stock performance of big tech through the quarter. Sanjana, it's great to see you as always. Welcome back to Trade Talks.
Hey, Jill, thanks for having me back here today.
You got it. And go over some of the highlights that you pulled out from the Microsoft earnings.
Sure. So providing a very quick check in as you know, one of the tech heavyweights in the Nasdaq 100. So very quickly, Microsoft's products today have become very critical in an increasingly digital economy. And what we wanted to highlight was that in the most recent quarter, the company has focused on helping customers optimize their workloads to deal with challenges in a very, very tough macroeconomic environment. So some highlights from the earnings that we'd like to highlight. The company beat expectations on both the top line and the bottom line by 1% and 2% respectively, which is quite impressive considering how challenging the macroeconomic environment was. Also wanted to flag that while PC shipments continue to decline due to softer demand, inflation and supply chain challenges, it did not impact usage growth of Windows, which was actually above pre-pandemic levels. And if you can look at the first slide here, we have highlighted some of the businesses that held up very well during this quarter, including Microsoft Office, Cloud, and LinkedIn. And just wanted to flag that Office, Cloud, and server products have been very big drivers of revenues in the recent quarters, and this remained true for Q1 as well. And to provide some additional color to underscore the strength of the business, Microsoft Cloud reached $25.7 billion in revenue, up 24% year over year. Microsoft 365 consumer subscriptions grew 13% for the quarter. LinkedIn revenues were up 17% year over year, driven by strength in the talent solution side of the business. So notice that they all grew revenues by double digits in a very challenging macroeconomic environment where PC shipments were declining. I think that this really underscores the strength of the offerings, the multiple levers of growth, and the ability of the company to weather challenges. Just as a word of caution though, cloud revenue, while it was up for the year, it was softer than expected. And with respect to guidance, Microsoft guided revenues and margins lower than consensus expectations for the next quarter. And growth in Azure also continued to moderate and is expected to fall sequentially. So that's something that we wanted to flag.
What about its stock performance relative to some of the larger big tech names that we have in the index, such as Amazon, Meta, Netflix?
So if you can see this chart here, we have highlighted the stock performance of Microsoft along with other big tech companies. So wanted to flag that challenging macroeconomic environment with high interest rates and high inflation have dragged down revenues this year in the most recent quarter. And this has weighed on the stock performance of all big tech companies. And what we have seen is that investors have been increasingly concerned about financial discipline after a period of sort of increased hiring and expenditure. Also wanted to acknowledge that with early signs that inflation is easing, one of the biggest headwinds for technology stocks might abate, and that's something worth highlighting. Also wanted to draw your attention to Microsoft in this chart here, which is down 30% since October 31st, 2021, outperforming on a relative basis 4 out of the 5 big tech companies. So in addition to macroeconomic headwinds, the stock was dragged down by decreased demand for computers. Cloud expansion also moderated, weighing on performance. But what's important when you look at the chart here, it's important to consider the events that shaped the environment in which the company was operating. And by that, I mean the pandemic. The pandemic spurred demand for cloud services as consumers work from home, shop from home, and turn to internet video and online gaming for entertainment. Post-pandemic, there's been a slower pace for cloud migrations, which has likely resulted in moderation of demand for cloud offerings. Long-term, it appears we're in the early stages of a shift to the cloud, and that's likely to be critical for the performance of the company going forward.
And finally, Sanjana, in the last minute here, what about revenue and net income growth?
Sure. So in this final slide here, we're providing some additional color on how revenues and net income have trended over the last 5 years. As you can see, the company has registered a strong revenue CAGR, compound annual growth rate of 3.7% over the last 5 years, and a net income CAGR of 5%. And that's pretty impressive. In the most recent quarter, the company has delivered double-digit revenue growth in a number of segments in a very tough macroeconomic environment. And what we believe is that the secular trends of digital transformation and cloud adoption are expected to act as significant tailwinds for growth in the long term, with some challenges by way of antitrust complaints from rival cloud firms. Near term, while there's expected to be some moderation in the rate of growth in the cloud business, given concerns about a slowing economy, keep in mind this is still a $160 billion plus industry, and the outlook for the long term remains quite bullish. By 2025, there's expected to be a massive $1 trillion shift with an additional 25% of workloads moving to the cloud. And that's a pretty impressive statistic that we would like to highlight. Also quickly, just would like to conclude that there were some pockets of strength in the recent quarter. Over the near term, there's likely to be some challenges from a slowing economy and moderation of cloud adoption. Over the longer term, the company appears poised to benefit from a strong breadth of offerings for the digital economy.
All right, Sanjana, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.